traders at UBA say though system liquidity was further depressed this week following the Treasury bills auction settlement, the expected 1.15 trillion naira FAAC inflow will elevate system liquidity. Kenneth Onuoha, team member, Assets and Liabilities at UBA, joins me now for more market updates as investors eye next week's monetary policy decision announcement. Kenneth, thank you so much for joining us on the show today. The high point of this week was the bond auction and then the T-bills auction we had midweek. Let's talk about the market movements we've seen so far up until now. Just take us through the wrap up of activities for this week.
All right, thank you so much, David, for having me. Like you rightly pointed out, on the interbank markets, what we have seen is the system liquidity that started off on Monday at about 260 billion net credit is currently in repos at this moment of about 900 billion. Now, this is largely due to settlements for both the bond and NTB auctions that were held during the course of the week. Additionally, we also had FX sales settlements that were also done in the course of the week. So all of this contributed in causing the interbank market to be in repo. That largely led to overnight and OBB rates to trend at about 25.5 and 26.5 and 25.5% respectively. Moving away from that, like I pointed out earlier on, we had a bond market auction on Monday. As opposed to the usual 360 billion that's typically up on offer, we saw that the CBN and the DMO did issue we had 2.5 trillion that was up on offer on the day in question. Now, what we saw is there were two maturities that were actually up on, put up two new maturities, 2031 and 2034. And we saw that the subscription levels were pretty high on these maturities. We saw subscription levels hit as much as 1.9 trillion, and then the actual allotments for the day were about 1.49 trillion. Now, stop rates printed about 18.5 on the 2031 maturity and 19% on the 2034 maturities. Moving quickly to the Treasury bills market, we saw that there was a bond, the NTB auction on Wednesday. We saw about 265.50 billion was up on offer across the three standard maturity or tenor buckets, 91 days, 182 days, and 364 days. What we observed as a result was that subscription levels were pretty high. It was quite robust, showing heightened investor appetite for the maturities or for the auction amidst the current economic landscape that we're currently in. And we saw that stop rates printed at about 17.5 and 19%. So what that translates into is that we have seen reduction in stop rates from the previous auction held on the 7th of February, where stop rates printed about 17.24% and 18% respectively. The only rate that was maintained was on the long end, the 364 maturity, where we saw the stop rates print at 19%. That's pretty much the high. Then, yeah, and then there was also on the FX side, we saw that the CBN did intervene by way of FX sales to banks in NAFEM window. We saw CBN sell on the 21st and on the 22nd respectively, and of course that did help in ensuring that the FX market, the current FX market, maintained some form of stability, because as at close of business on Monday, NAFEM closing was at about 1598, but then only yesterday it dropped about 1571. So expect that's pretty much the high point of the week.
And also talking about how we're having investors position and also weighing their options. A whole lot of eyeballs are fixed on next week's Monetary Policy Committee meeting, especially for the fact that this is the first since the month of July, the last meeting for the year 2023. Let's talk about the expected moves we'll see from the CBN. Yes, we know hawkish stance, but how hawkish? For you, what are your expectations in terms of basis point hike that we might see for the MPR?
Of course, the general sentiment, like you rightly pointed out, we have the MPC holding on the 26th and 27th. It's not just the first since July. It's actually the first for this new administration. The expectation generally is that in line with other macroeconomic indices, we expect that interest rates would actually go up. How high? Of course, there have been some market sentiments believe that it could rise as high as 300 basis points. So some have the opinion that it could rise as high as 500 basis points. But of course, all of that is where it's a wait and see game currently. We just expect that there should be an interest rate hike, but how far it will go, time will tell.
But in terms of case scenarios now, how does that also impact investors' decision at the end of the day, looking at the different case scenarios and measuring the different ranges of MPR hike?
Sorry, take that again.
Talking about the different ranges of MPRI likely case scenarios, let's talk about how investors might react to those.
But the general sentiment is that this rates would high. Investors are, of course, expecting that the rates would go high. Of course, that would naturally translate into, which is why we see currently calm sentiments around interest in the bond market, secondary bond market and treasury bills market at the moment. Everyone is just waiting to see what the CBN will lean towards, what direction the CBN will lean towards in terms of the rate hikes, and then we will obviously take informed decisions as a result consequently.
Well, we'll leave the conversation here for now. Kenneth, thank you so much for your time on the show today. That was Kenneth Onuoha, team member, Asset and Liabilities at UBA.